Okay, so you're an investor here in Ohio,
Mm.
maybe feeling a bit lost in the whole financing maze for that next income property.
Yeah, the feeling is pretty common, I think. So many options out there.
Or perhaps you're just searching for a clearer path, to grow your portfolio without hitting all the usual roadblocks.
Right.
Well, today we're going to zero in on one specific strategy. It's really picking up steam for funding in-print properties right here in Ohio, the DSCR loan.
Mm-hmm. It's definitely gaining traction.
Think of it like a financial tool that focuses more on the property's earning power, not just your personal bank account.
Exactly. And that shift in focus can be, well, a real game changer for Ohio investors.
Okay, let's unpack this a bit. So in simple terms, what really makes a DSCR loan stand out from, say, a conventional mortgage?
Well, the core difference is that DSCR loan approval hinges primarily on the income the property itself is expected to generate.
Not just my personal income.
Right. It's not solely reliant on your personal income and credit history like traditional loans often are. And given Ohio's, pretty diverse real estate markets, this approach can be really useful.
Okay, so our mission today for this deep dive is really to give you, the Ohio borrower, some solid, actionable insights.
Yeah.
We want you to feel confident navigating DSCR loans.
Sounds like a good plan.
We're going to demystify the acronym DSCR, talk about the paperwork, what you actually need eligibility, how to pick the right lender for you, and then walk through the whole application and closing process. Ready to dive in?
Absolutely. Let's start with the basics for our Ohio listeners.
Right, so when we're talking about a DSCR loan for someone buying investment property in Ohio, what's the fundamental concept?
The main idea really is that the loan works if the property itself can pay for it. Can the income it generates, usually rent, cover the mortgage payments?
Okay.
For Ohio investors, especially if you're building a rental portfolio, this direct link, property income to financing, is key.
Got it. We keep throwing around DSCR. What does that actually stand for, and how do lenders here in Ohio use it?
Okay, DSCR. It stands for Debt Service Coverage Ratio. Think of it as the lender's yardstick.
A yardstick for what?
To measure if the property's income is enough to handle its debt, the mortgage payments, the calculation is pretty straightforward. You take the property's net operating income, that's NOI,
NOI, okay.
and you divide that by the total debt service. And debt service is just your principal and interest payments for the year.
Right. Could you maybe give us an example, something concrete, maybe for a property in Columbus or Cleveland, to show why this ratio matters so much?
Sure. Let's say a property has a DSCR over 1.0. That means its income is higher than its debt payments. Simple enough.
Okay, income exceeds debt.
But say the DSCR is 1.25. That means the property brings in 25% more income than what's needed for the mortgage.
Ah, okay, so there's a buffer.
Exactly. That 25% is a cushion. It helps absorb things like, unexpected repairs, maybe a vacancy for a month or two. Lenders in Ohio, like everywhere, they see that buffer as a sign of a safer investment.
That makes total sense. So why is this DSCR metric especially relevant when you look at Ohio's, varied real estate scene?
Well, Ohio's got a real mix, doesn't it? You've got different economic trends, different rental demands from, say, Cincinnati to Toledo to the more rural spots.
True.
A strong DSCR tells a lender, okay, this property can likely handle the local ups and downs. By focusing on the property's own profitability, they get a clearer picture of its stability within its specific Ohio market.
Okay, so the big takeaway here is that DSCR lending kind of flips the usual script. It's less about my personal paycheck stub.
Right.
And more about whether the property itself can pull its own weight financially.
Precisely. And that fundamental shift opens up some really significant benefits for investors here in Ohio.
All right, good transition. What are some of those key benefits an Ohio investor might get from using a DSCR loan?
Well, one big plus is for investors whose personal income isn't always steady. Maybe you're self-employed, a freelancer, or just don't fit neatly into that traditional W-2 box.
Ah, so it's an alternative path.
It is. DSCR loans offer a way forward based on the asset's strength, not just your personal income documentation.
Interesting. So potentially a good fit for entrepreneurs or gig workers in Ohio.
Definitely. Another major benefit, often increased borrowing capacity.
How so?
Because the loan is tied to the property's income potential, you can sometimes qualify for higher leverage. That means borrowing more relative to your down payment if the property's cash flow shows it can handle the larger loan comfortably.
That can really accelerate things for investors trying to scale up across Ohio.
It absolutely can speed up portfolio growth. And in Ohio's mortgage market, which can be competitive in hot areas, DSCR loans can be really useful for funding multiple properties. They can help you sidestep some of the stricter personal income verification hurdles of traditional loans.
So maybe fewer hoops to jump through when you're trying to buy, say, property 3, 4, 5 across the state.
In some ways, yes. The underwriting tends to be more tailored. It looks at the specifics of income properties, whether that's a single-family rental in a suburb near Akron or a small commercial building downtown.
Okay.
And there's actually some finance research suggesting that properties showing consistent cash flow, meaning a healthy DSCR, might even snag better interest rates.
Better rates based on the property performing well. Now that would catch any Ohio investor's attention.
Definitely. And think about the common strategy here. Buy and hold.
Right. Very popular in many Ohio markets.
DSCR loans fit that perfectly. You're using the revenue from each property to support its own financing and potentially scale up. It just aligns well with that long-term investment approach common across Ohio.
So it really comes back to how that specific property performs in its local Ohio rental market, considering things like appreciation trends too.
Exactly. The benefits are really tied into the nuts and bolts of the Ohio real estate scene.
Okay, benefits make sense. Now, what about the different flavors of DSCR loans? What options are actually out there for an investor looking at Ohio properties?
Good question. There are a few main types you'll encounter. You've got your, let's call them traditional DSCR loans. Banks offer these, but so do non-bank lenders.
Okay.
Then you also see hard money loans, where the DSCR calculation is still a really important piece of their evaluation, even if the terms are different.
Within those traditional DSCR loans, are there different structures, like fixed versus adjustable rates?
Yes, absolutely. You'll find fixed rate DSCR loans, which give you that stability, and your payment stays the same for the whole loan term, very predictable.
Good for long-term planning.
Right. And then you have adjustable rate options, or ARMs. These might offer a lower rate initially,
Tempting.
but you carry the risk that the rate could go up later. Now, if you think rates are headed down, maybe it's appealing, but there's definitely more uncertainty there.
What about local Ohio lenders? Do they offer anything unique?
Possibly. You might look at portfolio lenders. These are banks or credit unions that keep the loans they make on their own books. They don't sell them off.
Oh, no.
Because they hold the loans, they sometimes have more flexibility. They might design DSCR programs specifically tuned to Ohio's economy or certain local rental market quirks. They might just get the Akron market better than a huge national lender, you know?
That really highlights the need to do your homework, doesn't it? Understand the details of each loan type in each lender.
Absolutely critical. Fixed rate gives you predictability, great for long-term rentals in Ohio. Variable rate might save you money up front, but you need to be okay with potential payment increases impacting your cash flow.
Are there other, maybe more advanced options an Ohio investor might run into?
Yeah, sometimes you'll see loans with interest-only periods, especially at the beginning.
What's the appeal there?
Maximizing immediate cash flow. Your initial payments are lower because you're only covering interest, not principal. And like we mentioned, the research consistently shows strong DSCRs generally lead to better loan terms, overall lower perceived risk for the lender.
So the bottom line is, picking the right type of DSCR loan means matching the financing structure to your Ohio property's cash flow and your bigger investment goals.
That's it, exactly. Okay, now let's switch gears and talk about what you actually need to gather to apply for one of these loans in Ohio.
Perfect. Let's get practical. An Ohio borrower is serious. They want a DSCR loan. What financial documents should they start pulling together?
Okay, documentation. It's absolutely crucial. Lenders need a really complete picture. The property's income potential, yes, but also your overall financial situation.
So detail matters.
Immensely, especially since DSCR loans lean so heavily on the property's performance. The quality of your documentation can make or break the application in Ohio. It means collecting everything from personal ID to deep property records and credit info.
Why is getting all this paperwork together so vital? Is it just about checking boxes?
It's more than that. Good preparation does a few things. One, it speeds up the whole process, quicker evaluation, maybe quicker approval, potentially better terms.
Okay.
Two, it shows the lender you're organized and serious, builds trust. And three, while the property's income is key, they do still look at your creditworthiness to gauge the overall risk. A full picture gives them context.
Right. So being organized up front, getting your ducks in a row, it builds confidence and makes sure you meet their guidelines.
Exactly. So let's break down the specific types of documents you'll likely need as an Ohio borrower.
Sounds good. Let's start with the personal stuff. What ID and maybe income proof will lenders typically ask for on a DSCR loan in Ohio?
Okay, basics first. You'll need standard government ID, driver's license, passport, that sort of thing, and verification of your social security or tax ID number. Now, about income verification. It's usually less intense than for a regular home loan.
Because the property income is the focus.
Right. But it still factors into their overall assessment of you, the borrower. So it's good to gather recent pay stubs, tax returns, proof of other income sources.
Even if I'm qualifying based on the property's potential income.
Yes. Showing additional stable income from, say, another business or investments not only strengthens your profile, it provides a fuller picture of your ability to manage finances overall.
What about personal bank statements? Do they usually want to see those for Ohio DSCR loans?
Yes, typically. Lenders will likely ask for bank statements covering the last few months.
Why?
To get a sense of your financial habits, your liquidity, basically, cash on hand. It helps them see if you can manage your personal finances alongside running this investment property.
Okay, so even with the property focus, they want reassurance that the borrower is financially responsible overall.
Exactly right. Now let's talk about the really critical piece for a DSCR application. The property documentation itself.
Right, the info about the actual income-producing property, what kind of paperwork is involved there?
This is like the absolute cornerstone of the DSCR application. You need to provide really detailed info. Things like the purchase agreement, if you're buying.
Okay.
A full property appraisal is essential. And if it's an existing rental, you'll need income and expense statements, the property's track record.
Are there Ohio-specific things lenders might want to see here?
Yeah, they might dig into local market stuff, think analyses showing rental demand in that specific Ohio town or neighborhood, historical rent data for similar properties nearby, occupancy rate trends, typical operating costs for that kind of property in that location.
Wow, so they really want to understand the local context.
They do. You'll also probably need things like recent inspection reports, any major maintenance records, and definitely documents showing any existing liens or claims against the property.
What's the goal of gathering all this property-specific detail?
Two main things. First, confirm the property's value that supports the loan amount. Second, and maybe even more critical for DSCR, provide solid proof that the property can generate the cash flow needed to pay the mortgage consistently over time.
So prove its value and prove its earning power.
You got it. And just a tip, if you use a professional property manager in Ohio, they can often provide really credible income projections and reports that can add a lot of weight to your application.
Good point.
The more accurate and detailed your property docs are, the better the lender can assess risk, set the loan amount, and determine your rate and terms.
Okay, thoroughness with property docs is key. What's the next bucket of documents an Ohio borrower needs to assemble?
Next step is your personal credit history and your broader financial statements.
Back to the personal side a bit. Even though we keep saying DSCR is property focused, my credit still matters.
It definitely does. Lenders still want to see your track record with credit. A full credit report gives them insight into how you've handled debt in the past.
So I should check my report beforehand.
Absolutely. Get a recent copy, review it, be ready to explain any hiccups or negative marks you see. Being upfront is always better.
Right. No surprises.
And besides the credit report, you'll need to pull together your personal financial statements. That usually means a balance sheet showing your assets and liabilities, and maybe an income statement for a broader view of your financial health. Lenders will also likely want personal bank statements, maybe for the last 3 to 6 months, just to verify your liquidity.
Okay, so they're looking beyond just this property deal to understand my overall financial picture and habits.
Exactly. It gives them a more holistic view. And remember, a strong personal credit history, that's a real advantage. It can help you negotiate better rates or maybe overcome a minor concern about the property's initial numbers.
Okay, so good credit is still a valuable chip to have, even in the DSCR game.
It really is. Just making sure all these personal financial docs are organized, accurate, and current will really streamline the underwriting process.
All right, we've covered the necessary documents. Now, how does an Ohio borrower figure out if they're likely to even be eligible for a DSCR loan? What are the main things lenders evaluate?
Yeah, eligibility, it really comes down to two main pillars.
Yeah.
How strong the property's financials look and your own creditworthiness as the borrower. Lenders use a few key metrics to judge this.
What are those key metrics an Ohio investor should be zeroing in on?
Okay, the big ones are the minimum debt service coverage ratio, the DSCR number that the lender requires, your personal credit score, and the property's value and its potential to generate consistent cash flow.
Gotcha.
What we want to do now is give you some guidance on how you can kind of pre-assess these things yourself before you even apply.
Sort of know where you stand before you jump in.
Exactly. If you understand the benchmarks lenders use and how your situation and the property stack up, you can spot potential weaknesses early, maybe address them before you apply. That proactive approach really boosts your chances of getting the loan.
Okay, let's drill down on that DSCR requirement first. What kind of minimum ratio do lenders typically want to see for Ohio properties?
Generally, lenders want that DSCR comfortably above 1.0. That tells them there's enough income to cover the debt. Often the minimum they'll set is around 1.2, maybe even higher sometimes.
Higher, depending on what.
Depending on the lender, the perceived risk of that specific deal, maybe the property type.
So 1.2 DSCR means the property's net income needs to be 20% more than the mortgage payment.
That's exactly right. And borrowers in Ohio need to know these minimums aren't set in stone. They can vary from lender to lender. They can vary based on property type, like multifamily versus single family. They can vary based on local market conditions in that part of Ohio and the lender's own internal risk models.
So hypothetically, a lender might want a higher DSCR for, say, an apartment building in Cleveland than for a single family rental in a smaller town.
It's definitely possible, yeah. Multifamily can have more complex operations, potentially more risk in some views. So the takeaway is you have to ask potential lenders directly about their specific DSCR requirements for the type of property you're considering in its specific Ohio location.
Really emphasizes doing that lender-specific homework. How can an Ohio borrower figure out if their property is likely to hit that DSCR target?
Okay, you need good numbers. Get accurate income and expense data for the property. Calculate your projected net operating income, NOI.
Okay.
Then estimate your total annual debt service, the principal and interest payments for the loan you want. You can use financial modeling software, or honestly, talking to a financial advisor who knows Ohio investment properties can be really helpful here.
And what if the calculation shows my DSCR is too low, below the lender's minimum?
Then you've got a couple of paths. You could look at ways to boost the property's performance, maybe raise rents if the market supports it, or find ways to cut operating costs. Or you might need to adjust your financing plan, maybe a larger down payment to reduce the loan amount, which lowers the debt service.
Makes sense. Okay, let's revisit the credit score. We know it matters, but how much does it typically sway eligibility for an Ohio DSCR loan?
Well, even though the property's income is number one, your credit score is still a really significant piece of the puzzle for the lender.
How do they use it?
They see it as a predictor, basically. How reliable are you financially? What's your history managing debt? A higher score definitely helps your approval chances. And importantly, it can unlock better terms like lower interest rates, maybe fewer fees.
So a good score still gives you leverage, even here.
Absolutely. Before you even start applying, it's smart for Ohio borrowers to get their current credit report. Look it over carefully, see any issues, any errors, be ready to address them.
Proactive again.
Yeah, and studies pretty consistently show borrowers with scores over 700 tend to get bigger rates on real estate loans. So think about it. In Ohio, where markets can differ region by region, having strong personal credit plus a solid DSCR on the property, that looks like a really good lower risk profile to a lender. Analyzing your score is crucial to understanding how they'll see you and what kind of loan terms you might get.
Okay, DSCR checked, credit score checked. The last piece of the eligibility puzzle is the property itself, its value, and its ability to consistently generate cash flow. What are lenders evaluating there for Ohio properties?
Right. Lenders need to feel confident about two things here. One, the property's current market value has to adequately back up the loan amount you're asking for.
Makes sense.
Two, it needs to show it can generate a steady, reliable income stream to cover that debt service for the entire loan term. In Ohio, things like location, local market trends, rental demand, and recent sales of comparable properties nearby, those all influence the value.
So knowing the local Ohio market is vital again.
Totally. To verify all this, lenders will almost always require a professional appraisal to determine the current market value.
Standard stuff.
Yep. And alongside the appraisal, you'll need those detailed rental income statements we talked about, showing past occupancy, all the operating costs like taxes, insurance, maintenance, utilities, everything. And it's not just about the past. They also want to see some realistic, forward-looking analysis based on current market trends. Can you project future cash flow credibly?
Okay.
By really nailing down both the current value and the income potential, Ohio borrowers show lenders their investment meets those DSCR loan criteria and makes a strong case for approval.
Okay. Eligibility assessed. Now, maybe the most crucial decision. Choosing the right lender for your DSCR loan in Ohio. This isn't just about grabbing the lowest rate advertised online, is it?
Oh, definitely not. Picking the right lender. That can honestly be one of the biggest factors in whether you even get the loan and what the final terms look like. And with more places offering DSCR loans in Ohio now, banks, non-banks, online lenders, you really need to do your homework.
So what should an Ohio borrower be looking for in a lender? What are the key traits?
You want to look for lenders with real experience, a proven track record, financing income-producing properties. Ideally, find lenders who really know the Ohio market, or at least understand its dynamics.
Experience matters.
Hugely. Getting a good rate is important, sure. But you also need a lender who gets DSCR financing inside and out, and has worked with properties like yours in your part of Ohio.
So they need to speak the DSCR language and understand, say, the Cleveland market versus the Columbus market.
Exactly. A good relationship here is built on a clear communication, understanding the specific underwriting rules for DSCR, and just a solid reputation for being reliable and helpful. Check reviews, especially from other Ohio investors if you can find them. In today's market, lenders who specialize in DSCR often have unique products or more flexible terms that really fit property income streams better.
Okay, so how does an Ohio borrower actually find and research these specialized DSCR lenders in the state? Where do you start?
Good place to start is just making a list. Include traditional banks and credit unions active in Ohio, but also look at those non-bank lenders and online platforms that specifically mention DSCR loans.
Cast a wide net initially.
Right, then start digging. Look for online reviews. Read any case studies the lenders put out. Check testimonials, especially from people who invested in Ohio. Industry websites or publications sometimes rate lenders or talk about their specialties too.
So some online sleuthing required.
Definitely. And don't be shy about reaching out directly. Call them. Ask about their specific DSCR programs. Ask about their experience with properties like yours in Ohio. See how well they seem to understand the local market.
And what about talking to other people?
Huge value there. Network with other real estate investors in Ohio. Ask who they'd used, who they liked, who they didn't. Getting that firsthand perspective on a lender's reliability, their service, how smoothly they handled the DSCR process here in Ohio, that's gold.
Makes total sense. Get intel from people who've actually been through it in Ohio. Okay, so we've got a short list of potential lenders. What's the next critical step in choosing?
The next really crucial step is comparing apples to apples, or trying to. You need to carefully look at the interest rates and the full set of loan terms each lender is offering.
Not just the rate.
Not just the rate. DSCR loan terms, as we've said, can vary a lot based on the property's cash flow, your credit, Ohio market conditions, all that.
Right.
So you need to look at the whole picture. What type of interest rate is it? Fixed? Variable? For how long? What's the loan-to-value LTV ratio they're offering? Are there prepayment penalties? This can be nasty if you plan to sell or refi early. What other conditions or covenants are buried in the agreement?
Covenants, like what?
Things like minimum liquidity requirements you have to maintain or restrictions on taking out other debt. Sometimes a lender offers a super low rate, but then they hit you with a really high minimum DSCR requirement or super strict prepayment terms.
The fine print can bite you. So those details really impact the long-term cost and flexibility for an Ohio investor.
Absolutely. They can make a huge difference. I always recommend creating a spreadsheet. Lay out all the key terms, rate, LTV, fees, penalties, DSCR minimum side by side for each lender. It really helps you visualize the true cost and find the best overall fit for your Ohio investment plan. Getting competitive rates, good terms, low fees, that adds up to big savings over the years. This comparison step is critical.
No doubt. And one last check before pulling the trigger on a lender, getting a feel for their reputation from actual customers.
Yeah.
Right? Especially in the Ohio market. How do we do that well?
Yeah. Customer reviews and testimonials are incredibly valuable. They give you perspective you won't get from the lender's marketing material.
Where should we look?
Check reputable places, Better Business Bureau maybe. Online forums where Ohio real estate investors hang out. Independent review sites. Look for patterns in the feedback. Are people consistently praising their responsiveness, transparency, overall satisfaction? Especially look for comments from people financing similar properties in Ohio, if possible.
Are there specific red flags or green lights to watch for in those reviews?
Definitely. Red flags, people complaining about unexpected delays, hidden fees popping up at closing, communication breakdowns. That tells you the experience might be rocky.
Okay.
Green lights. Reviews mentioning smooth, stress-free processing, clear communication, competitive terms delivered as promised. That suggests a lender who knows DSCR well and treats customers right. And again, talk to your network in the Ohio investing community. A direct conversation with someone who's used that lender can give you nuances you'd never find online. Taking time to check the reviews really builds confidence that you're choosing a lender who offers good terms and good service for Ohio investors.
Okay, research done, lender chosen. Now for the big step. Submitting the actual application for that DSCR loan in Ohio. What are the absolute must-dos at this stage to keep things running smoothly?
Right. Submitting the application. This is where the rubber meets the road. The keys here are accuracy, completeness, and communication. You need to fill out every form meticulously, make sure every single supporting document the lender asked for is included, and then stay in touch with the lender proactively. This is all crucial for a smooth process, especially navigating the Ohio market specifics.
Why is getting this initial submission right so important for Ohio borrowers?
Well, any mistakes or missing pieces in that initial package, they can cause serious delays. Lenders have to stop, ask questions, wait for corrections. In a worst-case scenario, major errors could even impact the final loan terms you get offered or lead to rejection. Your application is really your first big impression.
So you don't just want to toss the paperwork over the fence and hope for the best.
Absolutely not. Lenders really appreciate a well-organized, complete package. It clearly shows the property's income strength, your financial stability. It just makes their job easier and builds confidence from the start. It really sets a positive tone for the whole underwriting process.
Okay, let's break down the submission. First, the application form itself. Any tips for filling that out perfectly for an Ohio DSCR loan?
Accuracy, accuracy, accuracy. It's indispensable. That form is going to ask for tons of detail about you, about the Ohio property, about the projected income and expenses. Every number, every piece of info needs to be precise and consistent with your supporting documents.
What are common mistakes Ohio borrowers make on the application form?
Oh, things like incomplete sections, inconsistent numbers between the form and, say, the rent roll you provided, maybe typos and important identifiers. Any discrepancy can trigger questions, slow things down, or worse.
So proofread carefully.
Multiple times, seriously. If you can, have someone else look it over too, maybe your advisor or even a real estate attorney familiar with Ohio deals. An error-free application. That builds trust, speeds up underwriting, and just makes everything smoother. The thoroughness here really reflects on you as a borrower.
Right. Attention to details paramount. Okay, form filled out. Next is providing all those supporting documents we talked about earlier, correct?
That's right. Once the form is pristine, you need to submit all the backup documentation promptly. Your ID, the property docs purchase agreement, appraisal, income expense statements, any required income verification, your credit history stuff, everything they asked for.
And you mentioned promptly. Why is speed important here, especially in Ohio's market?
Well, parts of the Ohio market can move fast, right? Deals can happen quickly.
Yeah.
If you delay getting your documents in, you could potentially lose out on a property, or maybe market conditions shift and the loan terms aren't as good anymore.
Okay, delays can cost you.
They can. Best practice is to have everything organized before you even submit the application form. Make sure every document is complete, easy to read, and follows the lender's specific submission rules like file formats if submitting electronically. Digital copies are usually fastest, and double check that key things like appraisals and income statements are reasonably current. Outdated info won't help. Getting everything in quickly and correctly just shows you're prepared and serious and keeps the momentum going.
Okay, application submitted, document sent. Is the borrower's job done then? Or is there more to do to ensure a smooth path to approval in Ohio?
Definitely not done. Proactive follow-up is really beneficial after you submit everything.
How so?
Regularly checking in on your application status keeps you in the loop. More importantly, it lets you address any questions or requests for more info from the lender right away. That prevents delays.
So stay engaged.
Exactly. Good communication is key here. Sometimes the underwriter needs clarification on something, or maybe they need one more document they didn't initially ask for. Responding quickly to those requests, that can really speed things up.
Any tips for managing that follow-up?
Yeah, keep a log. Note down who you talked to, when, what was discussed. If the lender has an online portal for tracking progress, use it. Monitor it regularly. Basically, clear, open communication keeps everyone aligned to you, the lender from application review right through to final approval. Being proactive shows your commitment and reassures the lender you're ready to close efficiently.
All right, let's assume the proactive approach worked. We've navigated the application, gotten approval. Now we're heading into the final stretch, the closing for our DSCR loan in Ohio. What does an Ohio borrower need to be aware of during this closing phase?
Okay, closing. This is the finish line for getting the loan. Once you have that final approval, you move into the stage where all the loan terms get reviewed one last time, the final closing costs are tallied up, and all the legal paperwork gets signed.
Sounds like a critical stage.
It really is. It demands careful scrutiny of everything in that loan agreement. The terms, conditions, all the fees, your responsibilities. You need to be crystal clear on all of it and ensure you're complying with the lender's rules and any Ohio real estate regulations.
Why is this final closing stage so crucial for an Ohio investment property deal?
Well, like any big financial transaction, closing is where it all becomes legally binding. This is the culmination of all your prep work. Paying close attention to every detail now minimizes the risk of disputes or misunderstandings later on. It also makes sure you, the borrower, fully grasp all your obligations, the payments, the schedule, any special conditions before you sign on the dotted line.
So it's the final check to protect yourself and ensure everything is as expected before the deal is done.
Precisely. Let's walk through the key steps usually involved in closing a DSCR loan here in Ohio.
Great. What's the absolute first thing an Ohio borrower needs to do as they get close to that closing date?
First and foremost, before you even think about signing, you need to thoroughly review all the final loan approval documents and every single term laid out.
What specifically should we be looking at?
Dive deep. Check the final interest rate. Look at the full amortization schedule, how your payments break down over time. Confirm the payment terms, due dates. Scrutinize any prepayment penalties, what happens if you want to pay it off early. And read carefully for any other covenants or stipulations the lender has put in there.
And critically, compare this final version to what we were initially shown or quoted, right?
Absolutely essential. Compare the final offer line by line against the initial term sheet or estimate you got. Make sure it all lines up with your expectations and the financial projections you made for your Ohio property. Sometimes things change or details get tweaked. You need to catch that now. Given how local conditions in Ohio can sometimes influence things, it's vital to verify the final agreement reflects exactly what you discussed and agreed on. No surprises after closing.
Makes sense.
And seriously, don't hesitate to get professional advice here. A financial advisor or a real estate attorney experienced in Ohio deals can be invaluable. They can review the documents, explain anything unclear, and make sure you understand all the implications before you commit. This careful review protects you and gives you peace of mind.
Okay, review complete. Maybe got some expert advice. What's the next big thing an Ohio borrower needs to financially prepare for at closing?
Next up, prepare for the closing costs and all the associated fees. These are just a standard part of pretty much any DSCR loan deal in Ohio.
Beyond the loan principal itself.
Yes, you'll need funds ready to cover various fees, things like attorney fees for handling the closing, the appraisal cost, the lender's underwriting or processing fees, title insurance costs, and the fees for recording the mortgage documents with the county recorder here in Ohio.
Can these closing costs add up significantly for Ohio DSCR loans?
They definitely can vary. It depends on a lender's fee structure, the location within Ohio, maybe how complex the deal is. That's why it's so important to get a detailed, itemized estimate of all closing costs from your lender way early in the process, usually called a loan estimate or closing disclosure.
So you can budget accurately.
Exactly. Avoid sticker shock at the closing table. Having that breakdown lets you plan.
Is there any wiggle room on these costs? Can you negotiate them or maybe roll them into the loan?
Sometimes on certain fees, maybe some of the lender's administrative charges, there might be a little room to negotiate. It doesn't hurt to ask politely. And yes, sometimes you can roll closing costs into the loan amount itself.
But there's a downside to that.
Right. If you finance the closing costs, your total loan balance goes up. That means higher monthly payments and paying more interest over the long run. So understanding these costs, planning for them, budgeting for them, that's crucial for ensuring you're financially ready for closing and that your Ohio investment stays profitable.
Okay, loan terms reviewed, costs accounted for. What's the very last step in the closing process for an Ohio DSCR loan?
The final step is the execution, the actual signing of the loan agreement and all related documents. This is where everyone involved, you, the lender's rep, maybe a title company agent, reviews and signs everything.
The point of no return, basically.
Pretty much. By signing, you're formally confirming you understand and agree to all the terms, conditions, and obligations in those documents. In Ohio, this usually happens at a formal closing meeting, could be at the title company's office, the bank, or maybe an attorney's office. All the final paperwork gets signed, notarized.
And that makes it official.
That's what makes it official. Your signature formalizes your debt obligation, authorizes the funds to be dispersed, and legally seals the deal. Even at this final stage, take a moment, briefly review the key documents one last time before you sign. Just minimizes any chance of a last-minute misunderstanding. This final step ensures everyone's protected legally and that DSCR loan is officially funding your Ohio investment growth.
All right, that was a comprehensive walkthrough. We've covered a ton of ground. To help kind of cement all this for our listeners in Ohio thinking about DSCR loans, let's quickly hit some frequently asked questions.
Yeah, good idea. A quick recap always helps.
Okay, first one. Some was still a little fuzzy. In the simplest terms, what exactly is a DSCR loan?
Simplest terms. It's a mortgage where the lender's main focus is the property's income can it pay the loan, rather than just your personal income. The key metric is that debt service coverage ratio.
And remind us, how does an Ohio investor calculate the DSCR for their potential property?
Okay, calculation. Take the property's annual net operating income, NOI. Divide that by the total annual debt service. That's all your principal and interest payments for the year. Example, if an Ohio property has $60,000 in NOI and the annual mortgage payments are $40,000, the DSCR is 1.5. 60K divided by 40K equals 1.5.
Got it. What are the absolute must-have, non-negotiable documents an Ohio borrower needs ready for a DSCR application?
Most critical. Personal ID, detailed property docs, purchase agreement, appraisal, income expense statements if it's existing, your personal financial statements, and access to your credit report.
Okay, we know credit isn't the main thing, but can someone in Ohio with, say, a fair or average credit score still potentially get a DSCR loan?
Yes, it's definitely possible. Because the property's income potential is weighted more heavily, you might qualify even if your score isn't perfect. But be aware, a lower score likely means a higher interest rate or maybe less favorable terms overall.
Fair enough. What kind of ballpark closing costs should an Ohio investor budget for with a DSCR loan?
In Ohio, expect costs like attorney closing agent fees, appraisal fees, lender underwriting processing fees, title insurance, and county recording fees. The total varies, could be several $1,000s or more depending on the loan size and specifics. Always get that detailed estimate upfront from the lender.
And roughly how long does this whole DSCR loan process usually take, from starting the application to actually closing?
It varies, It depends on the lender, how complex the deal is, how quickly you provide everything they need. But generally for a DSCR loan in Ohio, you might be looking at anywhere from, say, 30 to 60 days, maybe a bit longer sometimes. Being prepared really speeds things up.
Okay, and last FAQ. Are DSCR loans only for big commercial buildings, or can you use them for regular residential rentals in Ohio too, like single-family homes?
Good question. While they're common for commercial and multifamily, DSCR loans are absolutely available for single-family rentals, duplexes, smaller residential properties in Ohio too. The main thing is the property's ability to generate income to cover the debt. So yeah, very versatile for income properties across Ohio.
That's super helpful clarification. Thanks for tackling those common questions. And I think that brings us to the end of this deep dive.
Yeah, so to quickly summarize, getting a DSCR loan in Ohio really comes down to understanding how lenders look at property income, being super thorough with all your documentation prep, and choosing your lender carefully, finding one with real DSCR experience in the Ohio market.
Know your numbers, get organized, pick the right partner. Those seem like the key takeaways for Ohio investors.
That's it. Focus on those areas, and you really increase your odds of successfully using a DSCR loan to leverage your Ohio real estate investments.
And bottom line, these DSCR loans can be a really potent tool for Ohio investors who want to grow their portfolios using the income their properties generate.
Definitely. With good planning and execution, it can be a very smart financing strategy for hitting your investment goals right here in Ohio.
So for you, the learner in Ohio, here's a final thought. How could really mastering DSCR loans unlock new possibilities for your investment journey in the Buckeye State? And maybe what's just one small concrete step you could take next to explore that potential? Thanks for joining us on this deep dive.